Hey, welcome back, everybody. So this is going to be the watch list for Monday, February 23rd. Kind of hard to believe that we are almost already through February and into March. But let's go ahead and take a look at the economic calendar. Now, I'm going to obviously throw a caveat in there, being that the Supreme Court struck down the tariffs that were already in place for different rates depending upon countries around the world. So, while those tariffs will go away, the president has now implemented just global tariffs of 15%. Okay, now those tariffs are only good for 150 days without the approval of Congress. So it was 10% on Friday. Then he moved it this weekend to 15%, which the administration believes is the maximum allowable by law. So we will have to see if that is going to apply to every country around the world or just specific countries. There's still some nuances out there as to exactly how this is going to go down. So we'll want to see what the market does. Now, when the tariffs were removed, the market raced higher insanely. So if you were in a position on calls, I mean, those contracts went up 300, 400, 500% in a matter of seconds. And then the implied volatility imploded and came right back down. So we're going to take a look at the charts in a second. Overall, the market momentum is still to the upside. So let's see what's going to happen next week. We really don't have anything other than factory orders. We do have a lot of governor speak on Tuesday, which sometimes just creates a lot of noise within the market. We do have Case-Shiller home price index. Now, the one thing with home prices is they have been on a decline. So supply is increasing exponentially, but there are no buyers. So mortgage rates are coming back down towards 6%, but there's still nobody buying. Well, why is that? Well, let's think back from COVID, right? During COVID, when rates were down to 2 and 3% for a 30-year fixed rate mortgage, what happened to all of the home values? They literally went up 40, 50, 60, 80, 100%. So a house pre-COVID that would have cost you 200 grand during COVID went to 400 grand. Well, why is that? Because a $200,000 house at 6% gives you a payment, just let's say hypothetically, of 2 grand. Well, if you cut the overall rate down to 2%, you could buy that same house and then have a payment for half the price. So therefore, the overall value started to explode to the upside because people could buy more home. You would get more bang for your buck, right? And we're now at an inflection point where home prices are so darn high that even if interest rates do start to come in, the affordability is still unattainable for so many people. Now, this is also a turning point in history with home builders, where home builders are no longer less expensive to buy a new home compared to an existing home. And so that's been also a dichotomy. And so we're going to want to watch and see what's going to happen with overall home prices. I know that there's a lot of pressure right now in Miami, in certain parts of Texas, as well as certain cities out on the East Coast. So we'll have to see how that's impacted. A lot of what's happening actually in Florida, as well as Texas, and to a lower extent here in Nevada with me, is that there's 0% state income tax. So when people were able to relocate during COVID or work remotely, where did they flock to? They flocked to where homes were less expensive. Florida, Dallas, Austin, Nevada, Vegas, right? And now what you're starting to see is that the return to work is having an impact on people who thought that they were just going to work remotely forever. Isn't the case. And then are there jobs in those cities? So you're now starting to see a little bit of deflationary pressure in the housing market. So we'll keep an eye on that. Wednesday, just more Fed governor speak. Thursday, initial jobless claims. We definitely want to watch that number because continuing claims last week did not meet expectation. And then we're going to have more inflation numbers coming out on Friday. So we're going to have the PPI as well as we're going to have overall construction spending. So the producer price index. What is it costing companies to manufacture goods and services in the United States? Is that cost staying stagnant? Is it going higher or is it going lower? So not a lot of news, which is a good thing, but what will maybe throw the markets is depending upon what does the administration change from an overall policy perspective. Now, let's take a look at some companies that are going to be announcing earnings this week. We do have some that are going to be picking up. I think that the market's going to definitely pay attention to. So one of them we're going to look at the charts for, Hims and Hers, pharmaceutical that has been just on a roller coaster to the upside, to the downside. It's actually been decimated right now, but it has a price target of $27. And you're going to see where it's trading today, below 17. Could that be a potential option play? The other one is going to be Home Depot. So Home Depot really dovetails right into the housing market, right? If people aren't moving and they're not upsizing or downsizing, are they doing more around home improvements? CAVA, this will be another one that's going to be very interesting, right? That was an IPO not that long ago. It just exploded to the upside and then right back down to the downside. We're going to also have NVIDIA's earnings. This is going to be a very dovetail sign with AI. And what is the strength of chip orders and what does that look like? Now, we're also going to get into a little bit of the software side, right, with CRM or Salesforce that has also just really struggled to the downside due to the fact that they believe AI is going to materially impact all of these software stocks, okay? And then CoreWeave, another one that high flyer, imploded to the downside, potentially some move to the upside, okay? So not a lot, I think, that's going to move the market, but a lot of sentiment that's going to help reinforce where price is actually at. So let's go ahead and start with SPY. I'm just going to zoom out to a daily time frame. Some of you have asked questions around this regard to charting. How am I charting these stocks? Well, a couple things I want to pay attention to, right? First and foremost, where is the prior day high and prior day low? So how do I understand that? And then is there a prior day high or low that I want to be aware of? Well, there's nothing from Thursday. There's nothing from Wednesday. They're all inside this candle. Now, we do get outside of the candle to the downside here on Tuesday, which is this candle low, which also measures the low from February 5th. Okay, so this is kind of a double bottom. Now, the candle high on a daily is going to be up here on Thursday, February 12th. So I'm looking at the liquidity zones that we are trading within. Then I'm going to go to a 4-hour time frame and say, well, where are we on a 4-hour, right? Are we within a range that I would need to get above a certain candle to go to the next 4-hour candle high? Or would I need to get below a 4-hour candle low to go to the next 4-hour candle low? And then I'll do the exact same thing on a 1-hour time frame. And it's really kind of as simple as that, right? Where you're saying that we are trading within these ranges, okay? If I get above this level, I'll take calls to go up here. If we get below here, I'm happy to take puts to go down to this level. If we fail the puts here, I think we're coming down to here. Now, you could say, well, Bill, what about 684? Right, absolutely. On a 1-hour time frame, this would be a stopping point. And if we don't stop here, then I think we're definitely going to draw on liquidity to the downside. So let's go ahead and just very simplistically, let's look at liquidity levels. And liquidity levels are based upon a technical analysis of candle types, okay? So there's a very scientific way as to how is supply and demand built. But if you're using this as your guardrails, okay, then you can kind of understand, well, where would I want to take a call? Where would I want to take a put? Or where do I need to break above to take the call all the way to the upside? So if we get above 690, there is nothing to stop us from going to 695, okay? Very, very powerful. Now, do I want to be looking for puts? Not necessarily. I mean, on a 1-hour time frame, my 9 is above my 21. I'm above VWAP, and we are trending higher, right? You can see how they were pushing, and then we finally were able to start holding in this zone. And then when I go to a 5-minute time frame, here's the overall consolidation. Now, do I want to take a call or take a put in this zone? The answer is no, right? I want to take calls if we get above this. And potentially, I want to take puts if we get below here. Why? I only have 30 minutes of demand. That is a very, very weak zone. I don't have any demand here, right? And then I'll get down here and I'll have demand at a, 4 hour, 3 hour, and this is where I know things are going to slow down. And then if I can break through this, then I can go to 681. But right now, I want to be looking for calls. My ideal call scenario is a break above 690.06 to hold and go dramatically higher to the upside. Okay, let's go ahead and we're going to do the exact same thing on QQQ, and then I'm going to just move faster through the other ones because you'll understand the psychology behind it. I'm going to turn off supply and demand. What do I want to be cognizant of? Again, this is my most recent daily high, daily low. What is the next daily high that I have to worry about? Well, it's not this day. It's not this day because we already went higher than this. It's not this day. We're higher. It's not this day. It's this day up here, okay? Then where's my next low that I really want to be cognizant of? Well, it's really this daily low right here that I want to make sure that if we flush this, could we go lower? Now I'm just going to simply move to a 4-hour time frame and say, what do my 4-hour candles look like? Well, again, this is the inside bar, okay, for the last 4 hours of the market day on Friday. Well, I already have a low. I could mark this low and I could mark this high, okay? I have a 4-hour low here. I have a 4-hour low here. Now, when I go to a 1 hour, this is really what I'm watching. Again, on a 1 hour time frame, where do I want to break out of? You can see all this wicking, right? We're kind of stuck here in this high range. So a 1 hour supply or demand zone is not going to be as strong as a 4 hour. So maybe you even want to color them differently, right? Make your daily one color, your 4 hour another color, your 1 hour a third color. For me, I like simplicity. So where do I want to consider taking puts? Well, puts below 607.33 or puts below 604.09. And where do I think we're going to? The next 1 hour candle structure. Now, if I turn on supply and demand, okay, you're going to be able to see, do the liquidity levels line up with what I have charted? And the answer is pretty much yes, right? We're holding, but we have buyers and sellers on top of one another. I want to get above 610 to really go all the way up to 615. Now, if I short here, yes, I do have some buyers down below, but they're not significant, right? Our hard push was here at 599, okay? Our other hard push was here at 597, and we could see that by the Dragonfly Doji, or we could see that by the bullish engulfing candle, okay? And then I got another hard push here at 593. These are where the market basically said, no, we are not going lower. We are definitely going to push higher. But if I break below these levels, then I can get a push to the downside. Doesn't mean we're going to go all the way to the next level, and that's why I trail my stop into profits. But my best chance for calls is going to be above 610. I don't have anything that is going to stop me until I get to a pivot high, right? We're looking at pivots. Where is the market pivoting? Pivot low, move up. Pivot low, move up. Pivot high, move down. Pivot high, move down. This is not a pivot right here, okay? This is not a higher high. This is a higher low, okay? It's not a pivot. So keep an eye on the rationale. Why? Why am I not using this as a pivot low to go high? Because we already brought all the candles through the liquidity level to show that if there was an imbalance, it has already balanced back out. Let's take a look at some individual names. Apple, we are, again, just really stuck within this range. Look at this on a 1 hour time frame. We're green, we're red, we're green. We want to break the levels to go higher, or we want to break the levels to go lower. But I don't want to be trading back and forth within the levels. So now you might ask yourself, well, Bill, why not just take puts here, take puts here, take puts here, take puts here? Well, because I don't know. I mean, what if I take puts here and this is the breakout? Because we already tested the level once. Or I take puts here and we break out because we already tested the level once and twice. Or if I take puts here and then we get this huge, massive candle to the upside. You have to understand that what is happening is when you keep retesting a level, it is retesting the overall supply or the sellers that is sitting here, okay? Eventually, it'll come through and eat up enough of these sellers, which is why you end up getting, and you go in puts here, you get this little pullback, and then you get a candle like this. Because all the people that were selling here are gone. And what does it do? It goes to the next liquidity level to the upside. So let's just look at supply and demand. And you can see we have a lot of buyers that keep forming down here, right? On a 2 hour, 45 minute, 30 minute, 1 hour. Why do I want to keep shorting when you keep seeing new people stepping in? Now, if they get above this level, right, we have 30-minute supply up here. It's not a lot. I'm confident that if Apple gains momentum, it is going to break through this. So the best trade to take is not the one between the levels. It's once you get above the level or you get below the level directionally, okay? Because that's where the dam breaks and everybody's like, oh shit, I got this wrong, okay? In here, yeah, you could make some winning scalp trades, but look at how they, keep kind of holding this mid-range as well. Let's take a look at Google. Same thing, right? We are trading between these ranges. I want to see us get above 316.40 to actually go higher. So if I go to a 4-hour time frame, what am I watching? The candle high of this 4 hour that we were just here before the market closed. Now, if you want to be ultra conservative, just make it the next candle over. I mean, it's like 10 cents away. It's nothing, right? So if you want to be ultra conservative, we want to get above this wick and hold and go for this window fill to the upside. Okay, now if I take a look on a 1 hour time frame, where do I potentially want to take puts? Well, I want to take puts if we get below this 1 hour candle low. Why? Because for 1, 2, 3, 4, 5 hours, they were holding this zone right here. So I want calls above the zone. I want puts below the zone. Where do I think we're going to? Potentially all the way down to back where the zone started. Let's just turn on supply and demand. Again, real simple. Let's see, what is it telling us? Do we have our levels looking good? And we do, right? I mean, everything's pretty much in check. But we get above 316, there's no sellers until 324. And we got a window up here that we could fill to the upside. Okay, so that's what I would be watching on Google. And Google was super strong. Let's take a look at Meta. I don't think, Meta's just coiling here, right? It's just stuck in this area for, again, 1, 2, 3, 4, 5, 6 hours. Where do I want to take puts? Below the 1 hour low. Where do I think we're going all the way back down to? One of the other pivots. Again, on a 4 hour time frame. Where's my lowest candle on the pivot on a 4 hour? It's going to be right here. Okay. Now, do I want to take puts here? No, because they bounced here and they bounced here. But if I take puts here, they didn't bounce until we get all the way down here and we have a gap fill below. So where do I like calls? Well, I don't want calls until I can really get above and hold this 658. They wick it, sell it, wick it, sell it, wick it, sell it, wick it, sell it, right? I want to see us get above the overall, at least this 4 hour time frame to hold to potentially go higher. Now, where could we run into a little bit of risk? Potentially right here. So if you want, go ahead and put another candle wick high. But once we get above that, then it's clear sailing all the way up to 676. Let's take a look at Amazon. Amazon, we got a nice gap fill above. So what I'm going to do on this one is just make sure we can hold 208.80. And if we get strength, right, we can push up into this gap fill. Now, they could also reject the bottom of the gap, kind of like they did here. Okay. Back on February 9th, they rejected the bottom of the gap here on February 10th. But if we can catch momentum and get some strength, I'd like to see us get into the gap, retest the floor of the gap, go higher to the upside. Let's look at NVIDIA. NVIDIA has earnings this week, so probably wouldn't trade this. I think it's going to be a lot of chop. But you can see, again, where are my price levels? Again, let's just go to a 4 hour time frame. And we'll see that we cannot seem to get above this 190, right? I mean, I can even move this here if I want to. Okay, kind of a double top. I need to get above 190 for 4 hours. 4, 8, 12, 16, 20 for 24 hours. They can't get above this level. So therefore, I'm not taking a trade until they can prove that they can get above 190.37 and hold it. Now, if we're going to go to the downside, what do I want to watch? Same exact thing. Where was the floor that they were holding? Again, if you want to be ultra conservative, we could take this lower level right here of 187.52. And if we lose that, then we can again push all the way down to this prior low. Now, do I think we're going to go to this low or we're going to go to this low? Again, it's all 6 of one, half dozen of another. but I'm going to take the lowest low to be ultra conservative, okay? Because if we break this, then I think we're coming back down to yet another low. And this is also a 4-hour candle low. So some of you have seen that I posted in the Discord, right, that my best trades have been once I break above or below a 4-hour price level. This is a 4-hour price level. This is a 4-hour price level. So if I can get above what's been resistance for 4, 8, 12, 16, right, 20, 24 hours, then we have the potential to go higher. But I need for me, I'd like to see a 5-minute candle close above the level, retest the level, and then directionally keep going and making sure that you are in confluence with overall QQQ. But right now, right, we are just consolidating here. Okay. Let's take a look at AMD. AMD is also doing nothing. It's just consolidating. I don't have anything unless I break above 204.97. Again, let's go and look. 4-hour time frames, right? 4 hours, can't get above it. It's the same exact chart as NVIDIA, okay? Now, to the downside, right? What should I watch to the downside potentially? Well, I want to see us ideally break the most recent 4-hour candle low. Yep, the candle low before it is on top of it. The candle low beyond that is, again, pretty much right on top of it. But I want to trade current market sentiment, current market structure. And if we look at what is it doing on a 1-hour time frame, right, we're pretty much very similar. So these trades, you have to understand that if you're going to take a put trade, whether it's here or it's going to be at this pivot low, you have to trail your stops because you had buyers here, okay? And then the next level of buyers isn't all the way down here. So one other question that people ask is, well, why don't you just put in more lines, more pivots? Well, I can, but I mean, we're talking $1 apart. So I like to keep my charts fairly clean and not have a million lines. I think it just creates a lot of confusion. Now, when you're trading a stock like this, again, let's look why we would not trade this one. It's very apparent in 2 seconds that you're going to see why. I can visually see it with my eyes, but this will also help, right? If you're taking calls, there's sellers here. If you're taking puts, there's buyers here. So this is what you're getting, this whipsaw of up and down and up and down and up and down, and you're trying to time the market. You need to get out of where are the sellers to go higher or where are the buyers to go lower. That is going to be your best risk to reward. But right now, you're just kind of fighting back and forth. So if you're taking a trade here at 202, right? Well, we have sellers. Right below it, we have buyers. Sellers, buyers, sellers, buyers. And so you need to find a balance. Now, when we come down here, do we ideally want to take puts? Not necessarily. I mean, again, right, we can. But the problem we have is we have all of these buyers down here. And we know when they get down here, we get a violent reaction to the upside. Or we get up here and we can take puts, right? I would feel a little bit better with puts up here than puts down here. I don't want to take calls up here. I don't want to take calls till I get above 204.97. Why? Because there's still enough sellers. Now, if I get above 204.97, I don't have more sellers till I get up top. Let's take a look at Palantir. It's going to classify as kind of one of the software stocks. I don't like this chart. We did take a trade on Palantir on Friday that did well. So you kind of see that I could worry about 4-hour pivot high, 4-hour pivot low, but I would rather use this fib. So I'm using this fib, okay, from the pivot high to the pivot low to say, are we going to continue to the upside? Let me turn this off so you can see it a little bit better. And we can do it from a 4-hour time frame, okay? So I'm watching this pivot high. I'm watching this pivot low. We didn't really reject at the overall 50% retracement, and it would have been on this candle right here. So you can see that they are holding this level. If they can stay within the golden zone without rejecting lower, I think we're going to go higher. So a fib is used from a pivot high to a pivot low to look for a reject. Okay, so it's from a high to a low. You're looking for it to come up here in the golden zone and keep going. If it doesn't keep going, okay, and then it just ends up consolidating here, up, down, up, down, up, down, it's eventually going up, okay? So if you don't reject a fib, where you're looking, it's going to turn bullish on you. So that's kind of what I'm watching from an overall price level perspective. And you can see how they keep bringing it up to this 50 fib, but they can't seem to really get above it. If a fib doesn't reject to the level and push lower where you really want it to go on the first try, and it retests, it's telling you that liquidity is fairly strong in this area and they want to keep retracing it. So what can I do? Well, I could say, well, I'll take calls if I get back above the 50 fib. Well, why not just, instead of having a line here, why not keep the fib here and watch how it consolidates, right? And does it move to the 618? And then does it move to the 786? And then does it go to the prior pivot high? Now, one of the other things, right, that I would want to change on this chart is I want to get rid of this 1 hour because the candle's already cut through it. So when a candle cuts through a price level, that tells you that the liquidity held or the liquidity did not hold. Okay, so I'm going to get rid of these. And now my new overall pivot high is also going to be my price level. And if we get above this pivot, then we can come up to this pivot. We get above this pivot, we can then move to the higher time frames. Okay, and then you're going to start to see that when you're using supply and demand. Look at how this all lines up, right? I don't even need the tool. I just turn it on so you can see it. If you're new to charting, get the supply and demand tool. It is the best $45 that you could possibly spend on software in understanding where are institutional price levels, okay? And it's always on real-time hours. It's never on extended hours. But right now you can just see we have a lot of consolidation here. So I'm going to leave that one alone. Let's look at Tesla. I know I'm running a little long this morning, so I apologize, but I'm doing more teaching, right? This is a mess. I don't want to trade this nonsense. I don't have anything clear, right? I really don't like puts because they keep buying it up. I do like calls if we get above 416. I like calls if we get above 424. Okay, but I don't want to be trying to trade calls, puts, calls, puts, calls, puts. So this one for me is a no touch. We'll probably have equilibrium here, buyers and sellers on top of one another, just looking at the charts. Yeah, for the most part, right? We have sellers and buyers. They're too close. We need more black space for a stock to run to the next level of liquidity. Okay. I'm going to run through these next ones really fast because they have earnings this week, so I would not trade them probably prior to earnings. But here's your levels to watch for Salesforce. 183, okay, 180 for puts if we break below these. If you want to get it, if we can get above 191 calls, 199 calls, definitely going for the gap fill. 2 gap fills above. I mean, this thing has just been decimated. So I think that there's potentially a lot of opportunity, depending upon how earnings comes out and what the forward statements are. But if you look at it, right, we're still in a downtrend. And look at these: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days. I mean, almost 2 weeks. The stock's doing nothing. Up and down, up and down, up and down. Do not trade these ups and downs. Okay, you're just going to get yourself into trouble that you don't want to be in. We talked about HIMS. This is another one, just pretty much decimated. I think it has a price target of $27. Yep. Average price target of $27.46. Okay, we're trading at $15. This one, again, acts more like a meme stock, like a GameStop. It's cheap. The options are fairly inexpensive. I do like calls above 17.22 to go for this gap fill to the upside. Possibly puts below 15.27, although this is an area of, huge overlapping demand on hourly, 4-hour, 1 week, 1 month, everything. I mean, I think your put opportunity is possible, but you're going to really have to wait for earnings to come out. So I do like calls versus puts. We talked about Home Depot earlier. Again, we're just trading within these ranges here. So I do like calls above 385. I like puts below 375. You'll note that, wow, Bill, that's pretty wide price, $10, right? Well, the bid ask on these things are pretty wide as well. So most likely wait for earnings to come out, but these are some, I think, good price levels that you can definitely trade again. And then the last one I'm going to cover is just for fun, kind of CAVA, right? It's been one of those stocks that, you know, IPO and it goes to the moon. I mean, something absolutely asinine and ridiculous at $174. We're now trading at $70. I mean, again, this is what happens when you have IPOs and everybody's all gung-ho on a bunch of nonsense that's not sustainable, right? So you can see we are trending to the upside. I do like calls at 67.21 for a potential gap fill going all the way back up to 84. I don't know what the price target is on this. Outperform, neutral at Citi, neutral at UBS. So you're going to have to wait for earnings to really see what does this one do in one direction or the other. So a couple things to keep in mind. And with everything said, if there's anything else you want to see, just shoot me an email. I'm happy to answer any questions for you. But hopefully you also learned something today around the overall charting and the technique that I use as I take my trades. So with that, guys, have an absolutely amazing week. I will see you all tomorrow morning for live trading at 6 a.m. Pacific Standard Time. So if you're not watching, you're truly missing out. See you soon. Take care. Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly Watchlist emails to get early access before the video drops here on YouTube. See you next time.